Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next to. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, we have the 1 hour chart of gold USD in front of us, and we can see that gold is trading at 1994. Finally, gold is trading below 2000 level. So if you're busy doing something, then please watch the video later when you're free, because I'm going to talk about some complicated stuff here. So the video may sound a little complicated. So if you're confused, then please watch the video again. And if you're still confused, then you can ask me question in the comment section. So let's get started. So first of all, we have been talking about the market sentiment for the last couple of days, and we have received good profit also because we have been very bullish for the last couple of weeks. And yes, because of the war, gold was also bullish. So yes, we made good money. Last week, we saw gold making a high of 2010. How much? 2010, 2010, or in some charts, okay, it is around 2009. But this is the high of gold right now. And as I have already told you guys on Saturday, that to continue the upside, gold needs to cross this level here, 2010 level. And we can clearly see right now that right after the market opening, gold is retracing. Gold is, okay, correction is going on. So as a result, there is not much volatility in the market. So the overall formula is still the same. If gold wants to continue the upside, gold needs to cross 2010 level. Then only we will get the confirmation that yes, gold is bullish again and we can go for a buy position. And as I've already told you guys that if gold breaks 2000 level, then gold will be heading towards 2050. But as of now, we can see that gold is trading below 2000 level. Okay, so this is the high. If gold wants to break, continue the upside, it needs to break 2010 and we can go for a buy above it. Clear? Now, gold is standing at 1993. What is 1993? 1993 to 1997 was the support zone. I took a buy position on gold around 1996 yesterday, and to be honest, I was hoping for a good upside because I was hoping that market would retrace and market would bounce, just like we were trading for the last couple of days and weeks. But sadly, market did not give us a proper bounce. Yes, we got a bounce, but the bounce was not convincing enough. Market made a high of around 2002 again, and we saw that around 2002 market was facing some selling pressure. As a result, market failed. Okay. I booked my 50% profit around 2001.5 because I could easily see the market was not having the strength to go higher. So as a result, I had to book 50% profit, and I'm holding 50% of my position right now. Maybe I'll exit after some time because I can clearly see, we can clearly see the market doesn't have the strength. Okay, because overall we have been doing very good so far, but right now market is lacking the strength. Market doesn't have the buying power right now. Okay, you can also see that I have drawn a wedge pattern on the chart, and wedge pattern is a trend reversal pattern. Okay, so if we have a wedge pattern, it means that market is losing momentum. The buyers in the market are losing momentum, and there is a possibility that we may get to see further downside on the chart of gold. Okay, and why it is happening? Okay, it is very important to know why it is happening. And the answer lies here. Gold flat as central bank meetings take spotlight. Gold prices were flat on Tuesday after slipping below the critical 2000 milestone in the last session as investors prepared for central bank meetings this week with particular focus on the US Federal Reserve's policy outlook. Okay, and if you look at the economic calendar, you can see that on November 1st, Wednesday, we have Fed interest rate decision coming up. Today also we have interest rate on euro, and as we all know that on Friday we have NFP coming up. So this week will be very important for forex traders because there will be some major changes on the charts. Okay. And usually when a crisis like war drives the market, this type of news doesn't have much impact. But we can see that right now market is responding to this type of news. So what does it mean? It means that gold is tired. Maybe market or gold has already digested the news of the war between Israel and Palestine. As we all know, that market has a very good digestion, just like the Russia-Ukraine war. Okay, maybe the market has also digested that the war between Israel and Palestine will keep on going, and as a result, we may get to see a slower market. That's why we need gold above 2010 level to give us the confirmation that yes, trend is about to continue. If gold fails to break 2010 level, then it will be a clear-cut confirmation to us that okay, gold is no longer going up. Gold has digested the war between Israel and Palestine, and maybe we will get to see a normal market from now onwards. Okay, so yes, this week will be very, very important. From next week onwards, we will get to see whether the market will be responding to war, or we will just get to see a normal gold market. See, trading is not merely placing buy and sell orders. Trading is about knowing the market. Okay, if you consider it as a profession, if you're not a gambler, if you're a trader, then it is very important for you to know what is going on in a market. It is very important to understand, okay, how to trade in different market situations. So the market situation is slowly changing. The market sentiment is changing again. Okay, so as a result, we need to be very, very careful, and most importantly, we are traders, so we need to be very flexible also according to the market situation. Okay, so first trading opportunity is if gold breaks 2010 level, we can go for a buy position. Okay, but as we can clearly see that we have a wedge pattern on the chart, therefore downside is possible. But still, I'm not hoping for a complete downtrend. I'm not hoping for a fall of 1000 pips right now, because I think that if market comes down also, we will get to see good bounces. Okay, we will get to see good bounces. So if gold comes down, my dear friend, the best support on the chart of gold is around 1960 to 1963. By today or tomorrow, if you see gold falling, then you can observe the market around 1960 to 63, because we have a good support around this area, plus we have FIBO 23.6% retracement level. Overall, the trend of the market is towards the upside. So if gold falls also, we can expect a bounce around this area. So when you see gold entering this zone, simply switch to a lower time frame like 15 minutes, 5 minutes, observe the market behavior. If you see market showing price rejection from below, you'll get the confirmation that yes, market is taking support. You can hit the buy button. How much you can expect? You can expect 40 to 70 pips. Okay, more than that also, but yes, I think the bounce should at least give us 40 to 70 pips. Okay. So this is the best support on the chart of gold right now, 1960 to 1963. Before that, we also have a support around 1980 to 1977. This also seems to be a good medium support in case market doesn't fall with heavy volatility. Okay, then you can expect that 1980 to 1977, this particular zone will provide support to the market. Okay, and here also we can expect a good bounce. So these are the two levels where we can look for support in case gold starts falling. Okay, though we have a wedge pattern is a trend reversal pattern, but still I'm not hoping for a complete downtrend right now. After the policy change, there may be some changes, but as of now, okay, we do not have any signs of a complete trend reversal. So apart from these two support levels, we also have a minor support around 1989 to 1990. Yesterday also I talked about this level of 1989 to 1990, and yesterday I told you guys that this support more or less it was a good level. But today you can see that because of the change in market structure, change in market situation, okay, this level has lost the status of a strong support, and it has become a weak support right now. And the reason is, you can see that gold is also forming slowly. Gold is also forming lower highs here. So the internal structure of gold is changing slowly. So as a result, the yesterday's support of 1989 to 1990, okay, has lost the strength. And if the volatility of the market remains like this, then you can expect a bounce. So this level, okay, I think that only day traders should go for a buy, and you can expect a bounce of around 40 to 50 pips, not more than that. But keep in mind, yesterday it was a good level, but today 1980 77 seems to be a better level for a strong bounce, not at this level. So in simple words, on the chart of gold, we have three support: 1989 to 1990, which is a weak level today; 1977 to 1980, good level, medium level. Under normal circumstances, we can expect a bounce; and then 1963 to 1960, the strongest support on the chart of gold. So far, we have been very much bullish on the chart of gold, but we can see that slowly the market structure is changing again. Though the gold is still retracing, but still we need to be careful, because we can see that more or less the gold has digested the war between Israel and Palestine, and as a result, it is waiting for the central bank meeting, which is happening tomorrow. So as a result, we need to be careful, we need to be flexible, and I will request that day traders try to stick to the levels. Do not trade on the middle of the chart. For example, if you're planning to place a trade here, then there's a high chance that you will be trapped here. If you're planning to trade here, you may get trapped. So try to stick to the levels. Maybe the time has come again to trade from level to level. So let's wait and watch. If market comes to 1989, 1990, yes, I'll be going for a buy again. But yes, this time I will not keep my TP open. I'll be going for my favorite 40 pips. And my dear friends, if you're looking for a better broker, not happy with a present broker and the spread, you can simply switch to GTC. GTC is not only a multi-regulated broker, the best part is that there is no slippage at the time of news. Yes, the link is in the description. You can check out the features. If you like it, then feel free to open your account. Bye bye, take care, see you tomorrow, all the best.